Okay, the play for today. If This is a quick section to see okay what I would do, and you welcome to follow or not follow. I mean, it's obviously your choice. On the daily chart, it's quite evident. On the daily chart, you would basically want to enter uh, short, I'm sorry, if it breaks that line here at 1756 following trend line. For the long side, if you look at the daily chart, it can go retrace all the way to that level here, which the play for that is to enter at the break of that level, which is on the hourly, the resistance at 1872, knowing that this is a counter trend trade and it will be choppy and could be disappointing. So make sure that you have very tight stop. As far as stop losses, this is where we put the stop loss. If you go short at the break at of 1756, which is about 150 pip. Of course, if you want to be extremely conservative and making sure that basically where the stop loss should be, the stop loss should be at that level here, but it is a 400 pip trade. So that's one option if you trade on the daily chart. If you have time to go into the hourly chart, then obviously you would have a bit tighter stop losses. So how, if you go on into take profit, the take profit at that level for the daily chart is difficult to figure out because the level is really low, and this is the last, basically it hasn't happened for a very long time. The first line, if you go, you have to go to the weekly chart. The first line of support that you're going to see on the weekly chart is actually at 1637. 1637 would be a trade that would be, let's see here, we represent about 120 pip. If it breaks that level down, then there's basically no stopping. Because the next level is pretty much going to be, it's probably going to follow about 100 pip following down here, and then of course very low here. So if it breaks that first level of support, it has another 238 pip to go down, and if it breaks that second level of support, it can go another 500 pip down without without pretty much no level of support based on the weekly chart. If you're looking at the hourly chart, as we've talked a lot about it, the TRENDRAGON trend line pretty much tells you very clearly where you should enter. First entry is right here, which is where the price is right now on the long side. Second entry would be here on the long side. On the short side, this would be the first entry, and this would be the second entry. So if we look basically on the stop loss, let's look at each entry individually and get an idea. Okay, first entry here, the potential, we talked about it, the potential is about 25 pip here. Your stop loss would have to be here. So based on that, you would have a potential of minimum 26 pip profit, but you would have a stop loss of 39 pip. Okay, the second entry would be here on the long side. Stop loss, I would recommend to put it either here or better here, and of course the best would be right here. So if you're looking from here, I believe that we talked about this was about 400 pip. trade. Now the potential profit on this, if the currency goes back into that level of range, will be about the same thing, the same level of range or amplitude. So based on that, let's look at this. If you enter at this level here, your stop loss is either 66 pip, 89 pip, or 114 pip, and potential upside 100 pip. Okay. um, the best way into entering into that entry, because it is a breakout trade from a range, you would either enter right when it breaks or protect yourself against false breaks, so the price will go back up here, then come back down here, will while respecting that level of 1872 or about, and then we would want to go back up here to get to the top range. So here we'll be looking at 50 pip, here 50 pip, and of course the first part will be 50 pip. So the most conservative way of doing this is wait for the break and a retracement down without breaking the previous level of resistance, which is now support, and a curve back up to go hit that 100 pip. Okay, if you wanted to enter right at the first break, I would certainly recommend to get a very tight stop loss on this one, just to protect yourself against false break. So if it breaks here, what you would do is what I would recommend is probably put your stop loss here at that level here, and if the currency goes back under here, especially well into that level, I would certainly consider to cut my position, and then realize that if it is a false break, then the currency should go back down very quickly into the lower range, band of the range on that level. Now if you're looking to trade on the short side, quite about the same, just opposite. The short side is technically would be easier to trade than the long side. You would have different entry level, this entry level, this entry level, and this entry level. The one that would be, I think, good, better would be this one or this one, this being close to the mid-range, which is not so reliable. So if you enter at that level, you can actually put your stop loss here. Same if you enter here, your stop loss will be at the same place following TRENDRAGON trend line. Actually not so bad if you think about it too, because it's you have an entry here and a stop loss here. The price would have to break that level of now resistance, the mid-range, and the other level here, as well as the TRENDRAGON trend line. So there's a lot of level of resistance if the price breaks down there, and it is following the long-term trend line. Okay, as far as take profit, well, the take profit is the same as when we talked about the daily chart, at least 150 down plus. So we'll go and look at that. Like we said, the first take profit will be here. And then after that, if it breaks that level at 1637, then you get another 200 pip down, and if it breaks that level, you get 500 pip down. Technically, of course, it's not going to go down in one shot, but it would probably confirm that break of that 1.1800, which is a psychological break. Okay, so those are quick pointers for you to consider for this week trading.